What's up, everybody? How's it going? We are back. Pure Alpha number 7. It's been a minute, but we got a extra crispy guest with us tonight. The creator of
Extra crispy.
Hexfire.io. Extra
Excellent.
crispy. How
I
you
like.
gentlemen doing today?
I'm doing fantastic, man. How you doing, Slav?
Dude, I'm doing great. Glad to be on the stream. You know, I've been grinding the school stuff lately, so it's nice to take a little break and talk about the fun stuff.
That's
Mad
all right.
crypto
You don't have to
gains.
lie, man. We all know that you're looking at your crypto portfolio every 5 minutes.
I don't know, you guys notice I'm always kind of in the chats listening in the background. I'm saying.
Yeah, I don't know how you stay
You do make
focused
the
when
rounds.
crypto's moving.
Yeah, dude, it's hard. It's hard. I'm in class, in like a seminar. People are like presenting a case, and I have the Pepe chart on my screen.
I like this crispy mang. Let's do it. Crispy mang.
Oh man, we need to get It's a good comment here. Access when crispy when Hexfire intro. We need it.
Can we get an answer from Crispy Man on when Hexfire intro?
I got an intro. Hey now.
Dev.
There you go.
Dev.
That's it.
Man.
Yeah, I mean, probably good moment to like pop off and give my appreciation and thanks to Markable Thoughts for the awesome intro. So if you guys are looking for any video content done, I'll direct you his way. I think it's Proof of Peers only or Land Wills only. I don't remember. He changes his name every 3 months, it seems like. But
every time I see that intro, I notice something different.
That's good,
There's
man.
There's so much detail.
Thought-provoking,
He also made my intro too. He did all that animation of the Hedron, Hedron thing, and his brother Steak and Chill did the music.
Yeah, man, and they just do really good work, and I think he's done like 15 different Hexagon intros and videos by now. So big shout out to the Beard.
Yeah. Well,
I'll give him maybe if he does one for me, I'll give him a copy of my new meme coin. Because apparently anybody can make a meme coin. So.
Yeah, I mean, just have an AI do it, right? You can make that the Pepe Fire token or something like that. I think you're gonna.
Yeah.
Oh man. But everybody in the chat, thanks for showing up. 91 people off the rip. I'm excited. We got some good stuff in the works for you guys. It's been a minute. So we're going to do basically a brief overview, Hex, Hedron, Icosa ecosystem, a little bit of where we're at in terms of like market cycle stuff. And then we'll get to what we get to. Usually when we got us three up on stage, we go down some nice tangents. But I think we got a nice jam-packed hour. And Axis has a special little surprise for you guys.
Okay, so do me a favor. Anybody that wants to win a copy. So I was on before I even get in there, like I just got back from the cruise. It's been about 3 or 4 weeks. I don't even know how long it's been now since we did our last Pure Alpha, but it's way overdue. I tried to make it happen last weekend, but I just got sick. Otherwise, we would have thrown it up last Sunday. But so apologies for that. Couldn't contain myself. Just had to go ahead and get sick on the cruise. But it was good. It was a good time, good event. Got to meet with a lot of people in the space. A lot of people that have been in here for a while, and then I actually met some new people that are very prominent in the PulseChain space. So that was cool, right? And the whole point of going to those things is to network with people and build connections and work together to help make the ecosystem grow. So that was appreciate those guys for coming up to me and having a discussion and getting the ball rolling. And with that, two of our favorite German friends, their names are Falk Sabel and Johannes Milton. They put together this book. It's called The Power of Hex, Financial Freedom with Crypto. And we're going to be giving away a copy of this today. So if you want to just go into the chat at any point, we're going to run a raffle at the end for this book. It's about 125 pages, and it basically breaks down the entire ecosystem from top to bottom. Tells you how to get into crypto, what's a blockchain CD, how the price moves, what the T-share is, and so on and so forth. And so if you want that, make a hashtag for Pure Alpha, and we'll be running a drawing at the end, and then we'll get with you guys through the DM and give away a copy of this book. So shout out to those guys. I'll probably be doing a separate stream with them in the future, just to kind of go over that and just kind of get their take on what the process of developing that was like. So appreciate them for giving me a few copies of that to be given away over the next few streams. And my dude. Make hashtag pure alpha to try to win.
Yep. Go ahead, put it in. I'm collecting. I got StreamYard has this giveaway tool, and if you do hashtag pure alpha, exactly what I put in the chat, you'll be entered to win at the end. So stick around. You got to be here at the end live to claim your reward. By the way.
Yeah.
Yeah.
So stick around.
Oh, that's a little sneaky. Yeah.
Yeah.
Yeah,
Hey man,
if
it isn't,
you leave it up. You better have somebody. Get your dog, get
Yeah.
your wife, get somebody at the computer to claim.
Yep. I mean, hey, if people aren't going to stick around for all this content, at least they'll stick around for a free book, right?
Right. That's the whole point, right? It's the first all about the free book.
All right, well, gentlemen,
some cryptocurrency. No, I'm just kidding.
It may or may not.
Really
Stick around to find out.
Yeah, exactly.
All right, gentlemen. Well, where should we start? There's a lot to cover. Access, where do you want to start, buddy?
We just had a recent an event, right, that happened in the Hex ecosystem. I had an informant out there looking through the blockchain. He goes by 0x Brennan on Twitter, and he messaged me and he said, he's a man. He messaged me and he said, you know what? You might want to bring this up during your stream today. And what he said was, let me see if I can pull up the tweet, because he actually just tweeted this out. Pull this one up there, Slothman. He says, another ETH whale who bought 1,000 ETH worth of Hex in April. And remember, I was live with Ryan Hefner when this happened. We were going through the liquidity pools, and the price had slipped back down to 5.2 cents inside of the anchor bands on Hex, where the most liquidity is. And this whale jumps in with 15,000 ETH. He market buys 1,000 ETH worth of Hex and stakes it immediately. And so he staked it until May 6th. Well, that was yesterday. He just ended the stake today. He paid $260 in gas fees, but he made $35,000 in Hex.
Mm-hmm.
And this is the kind of the segue for us to start a discussion on this whole demeanor behind eHex is going to die, and I'm not going to stake because I want liquid for the bull run, which is totally valid. And I have a liquid position too, because I want the most optionality going into the mainnet fork as anybody else. So that makes sense. And then we'll actually reinforce this later with some of Hexfire.io's supply dynamic stuff. You'll be able to see how, we just went under 10 million T-shares for the first time in history.
We
and that's
did.
amazing.
Yep.
And we're like, some of the speculation, as you might think, would probably be because we're leading into this mainnet fork and people want that optionality. But I think we're going to have this divergence so that whatever volatility happens in terms of Hex staking, Hex price on either chain, as that stuff settles out, you're going to start to see a push toward restaking because of the fact that the price will rise, and because of the fact that there is still so much money on Ethereum that can be doing these kinds of plays. Staking for 2 months and pulling out 35 Gs is not a bad deal. So I don't know. What are you guys' thoughts on that?
No, 100%. Like, go ahead, Crispy. You got it.
No. Good, Slop. I'll get next one. I got something to say.
All right. Yeah, like I know a lot of narratives, even from like 2 years ago on the PulseChain launch. Like people were like, eHex is dead. It's not going anywhere. Like, why would anybody want to transact and do these things on Ethereum when it's so expensive? And I think that example that you brought up is a really strong reason why eHex will always continue to have some activity and some, well, more than activity, demand, because trustless yield is trustless yield, and Ethereum is a network with value because it's the biggest EVM chain that exists, because it's the first one. It's where most of the money is. It's where most of the DeFi money is, and people who have large financial stakes into Ethereum have incentive to keep alive a system where they can peel off yield on a month-by-month or quarter-by-quarter basis. So as long as there's a liquidity pool where people are incentivized, as long as there's demand, and a liquidity pool where people are incentivized to provide liquidity because of the fees, then people who have economic energy will be able to extract money based on these rolling stakes. And so they're going to be the ones who have interest in keeping the system propped up so that they can even just earn more Ethereum every single month with, like, say, 10% of their Genesis ETH back.
Yeah. Well, I think I'm seeing some of the same things you were, Axis. Certainly, we'll look at the charts. You'll see how how staking has really dropped off since people are expecting launch, and that's been happening. But I think that there's a couple of crosswinds going on with the whole mining stuff, right? One, this high gas price is hurting people, so that's true. It is hurting people on Ethereum because there are stakes that cannot end because it costs more gas than it's worth to do it. You know, like yesterday, if I remember correctly, 44 ETH, or maybe it's still today, but 44 ETH just to end all the stakes from one day. That's $90,000. Now, overall, system-wise, that's much lower than the yield. That
We're losing.
Can you hear
Chris,
Max?
and back.
Yeah. You back?
And I'm back. Can you hear me now?
You got to stop
Yeah.
running all those freaking OG codes in the background while you're on live streams, bud.
Yeah, I know. Well, this was already working, you know, before we were talking. Hey,
Sorry,
but you know,
we're sorry we had to do this in the middle of you processing data.
well, yeah,
I
I can only afford one computer.
$1,000 rig in the back room that you can't even use. No, just kidding.
Yeah. Well, I didn't expect that, but yeah. Well, what I was saying is very expensive to end stake. People are getting stranded, but at the same time, you got this weird thing happening on ETH where it's becoming more rarefied, right, to be a miner, I think. And yeah, so who knows how things go as we go forward. You would think that we'll have big increases in the mining population of Hex. I think that'll happen. I just think that we're going to see much larger growth in the speculators.
Yeah, I think leading into this bull run, I mean, the price performance is going to get so insane that you know, it's people have you know, recency bias in terms of the price of Hex. Look what happened just with the run up. The whole time it was running up 7x. People are like bearish still, and then as soon as everyone flips bullish and you break 10 cents, that's when it inverts, right? It's like always going to be the opposite of the herd.
Yep.
There are our fodder to pick at, right? And I think we even didn't we do a tweet about that? It was basically about the adoption curve, is where adoption increases the most at the end of a run up. Something like that. Let's see if I can find it.
And that pairs with the Hex being a Veblen good kind of thing. Like when it's the most expensive and the most in demand is when it has the most value.
Yep. Let me see if I can find that. It wasn't that long ago, was it? Sheesh. It's already been like 45 days since the top, huh?
Crazy, right?
Time happens fast when shit's dropping. I just walk away. Like,
yeah.
Like
nothing happening here.
You don't want to hear me say the price is going to go down, so I just stop talking. Here it is, though. Like the price, once it peaked, you know, you can see this, how each time that the price moves higher, the amount of adoption in red increases at an increasing rate. And it makes sense too, right? Because the price is moving more rapidly, more people are buying, right? But then this is a key metric because it's new holders, right? This is new wallets entering. This isn't used wallets. So, but you got that huge spike up in a new adoption right when we broke 8 cents on that testnet V3 news. You know, and so like Veblen good, man. People like to chase things people like paying more for things. That's I guess the bottom line. So now that we're down here in prices, let's see if I can pull that up. You know, we're down here in prices. There's actually some interesting intel. I don't know if you guys watched the TA stream yesterday with Hans. I think that was pretty based. If you want like a more unbiased viewpoint, listen to Hans Hex, because he'll just tell you where the value is on the chart. And we're in that value zone now in terms of like where you'd want to buy an asset. We're there. And this is a 2-hour chart. And so we've been just getting hammered down since the top. But we actually saw bullish divergence forming here for quite a while. I mean, I think I was posting about that for like 2 weeks, where there was like on the 4-hour chart, you saw bullish divergence happening. Let's see if I can find it. Should be right here. I tweet too much, man. Just scroll.
Got a problem, Access, man.
So April 22nd, I make a note here. It says, here's what divergences look like. It's the RSI, is called the Relative Strength Index. What that means is, you know, as the market's going in a direction, is it getting stronger or weaker in terms of price up? So bullish divergence is when the price is going down, making new lows, but yet the indicator is saying that it's making higher lows, which is signaling a trend reversal is coming. And so I detailed that here on the 22nd, how we were making newer lows, once, twice, three times. The wicks kept getting bigger, the candles kept getting smaller, which meant that this was acting like a support beam, like a trampoline, pushing price back up to stabilize it. And ironically enough, this is right around that region where there's most of the liquidity sitting in the USDC pool, and where that big whale bought, and where he's then staking. So it's not that one guy can move the market, but there's just not that much liquidity. So it doesn't take a lot of economic energy to get the price to pause around a deep value zone like this. So then, fast forward when the next tweet was on May 2nd, 2 weeks later, this thing played out for an extended period of time. You made a higher low again way out here in May. And this is how much farther the price drew down. But if you were doing, this is like a good example of when to DCA, right? And I think, Crispy Man goes at length to describe how powerful DCA can be. Because if you would have bought the bullish divergence on the 22nd with all of your stack, you wouldn't have been able to buy back even, another whole penny lower here at 4.7 cents. And this was on trending volume. So the volume started to increase, meaning sellers were giving more back to the ecosystem, and buyers are able to absorb more of the supply at a better price with less slippage, because that's where the most liquidity was. So that's a loaded statement, but if you go back and listen to that about 4 times, then you'll be able to capture all the value that's in there. But look at, I went on here and I said, okay, bullish divergence is playing out. We made a pennant going into that resistance, and that means that it consolidated around where resistance was, but it was still being absorbed at a rate that was sustainable. And then the price was in the middle of a move. The way you measure these bullish pennant patterns is you measure the move from the base to the top of the pennant, and then you project it out. And we actually did go straight up to 7 cents overnight, or it was like 6.89 or something like that, and then crash back down. And so now that's where we're at now in terms of price. We're we came up here to the 6.9 cents here, and then we started another pennant pattern, but this one time it broke down. And this is because there's just uncertainty in the market. People are getting fed up in terms of mainnet predictions. But so we're trending down on decreasing volumes, similar to what we did here. Volumes were decreasing, and price was decreasing, but yet the strength of the market was increasing. You had that bullish divergence forming on the RSI. And so you got the same thing here, whereas volumes are decreasing, but now the volumes are so low that prices are kind of sustaining around this 0.618 Fibonacci level. And that's kind of a good signal that at least price can hold here until some major event forces players to act a different way. So I think I'm starting to see this round out at this level, which is super, super good. And remember, this is the value zone right here between 5.9 cents and 4.6 cents. These are this is where Hans Hex would have the granny investor, so to speak, buying. I don't know if you guys want to add anything to the price of Hex.
I was sad to see that pennant break down. I was looking at it, I was like, oh, this is such a beautiful setup. Let's see if it can follow through.
Well, if we go back to Crispy, I don't know if you knew this or not, but just in terms of this pennant pattern, I know, price charts are going to do what they're going to do, but if we go all the way back to October, I think it was last year, yeah, right here, we did a similar thing on a bigger scale where Godwill comes in. Remember, volumes are falling. You bottom out on volume. You start to get an increase in volume. What do you see here? Big pennant pattern. Broke down the same way. But this was much more volatile, and there was a lot more coins trading hands, different from now. So that's the difference maker here. And we are seeing that. Okay, I want to jump to liquidity because it would help reinforce what we're seeing now, but I'm gonna hold off for now because there's just so much stuff to get through. But Godwill basically pushes the price up 2 cents in like two and a half days and absorbs like 160 million hex off market. It was a crazy amount of hex that just got absorbed. And this was in that redistribution period. But so this is an example of what is a bullish pennant pattern. And then this would have broke out and could have went to basically 8 cents then, but there was just too much supply in weak hands. And so that now that all of that has been played out, we went lower, hit our bottom, capitulation lows, huge wicks, breakout, dollar depeg, and then here we are.
So would you consider this to be a whale making value?
in this territory here, or back with Godwill?
No, when you were looking at October.
Okay, with Godwill, that is for sure. And it's a whale injecting liquidity to draw interest back into the market. So I guess you could say that that's making value, because if you're making the market interesting again, you're giving the market an opportunity to go another leg. And so, one of my cool friends named Crispy Man built this cool volatility chart that kind of explains your point exactly, which is, this blue line on the bottom is the volatility, and the volatility hit lows, and then, Godwill steps in and just spikes the volatility and absorbs tons of supply off market all at once, and gives these guys an exit point around 5 cents, which then they capitulate the lows, and then we make a higher low on volatility.
Yeah, and the value that they build for themselves and for the entire market is later, right? It's postponed. It's not now, because that 160 million is equivalent of all of the liquidity we even have, right? At one time, sometimes, right?
Right.
At times, and even though you might see price action down later, it just means, and I guess we'll see that on the other charts, right? We just don't have very much hex available on the market for sale, so it's absorbing whatever that excess is.
Right. This is a great time to segue into the supply, and so if you just want to kind of, we'll go into the supply now, because it's important to understand what we're seeing in terms of supply available on market. Well, I guess we can start with the stoplight, because it's everyone's favorite indicator in terms of easy visual of how to understand this market. But there's like less than 100 million hex available to buy, so a dollar value is associated to that. Let's see here, 96,847,094 times, what's the price right now?
5.6.
Yep.
5.6 times 0.056.
Yep.
So there's only like $5.4 million. I think that's right. In the pools. And like, again, the guy that ended his stake today, he bought 1,000 ETH, which was like 29 million hex. So if a guy like that comes in, and there's two ways to play this, right? You can either set liquidity, let the price fall into your liquidity, and then just pull your liquidity out, which now is hex off market at better and better prices, or you come and you market buy and you push the price up. And the ultimate play here from a whale's perspective is you absorb supply and you pump price if you have enough deep enough pockets, right?
Yep.
So then it creates a compounded effect in price movement.
Yep. Pair that with a single-sided liquidity position higher to support new prices. You do some pretty crazy things if your pockets are deep enough. And some of those levels you were talking about before on the chart, where you're seeing some of that support, line up really, really well with the 3 to 5 cent big liquidity, not wall, but big liquidity zone that one player has basically been supporting for over like 300 days, 400 days, something like that.
The anchor liquidity has been in there for 700 days.
Yeah,
like almost 700. So it's it's been since the bear market. Let's pull up the LP. I gotta refresh it. Actually, that was cool. I should have kept that on there, because that was what the liquidity used to look like. Let me see if I refresh this once, because that's a good example here for you guys to kind of see what the liquidity looked like when we were at 10 cents and what it looks like now. So if I pull this up, all right, this is a daily chart of hex, right? And if you don't know how to read this liquidity chart, the blue bands is the smaller fee pair. So the guys that are putting their hex in USDC for tradability, they earn less fees, and the yellow is the guys that earns more fees. So back when we were around this price range right here, which was roughly like 9-10 cents, this is what the pools looked like. There was like a nice even distribution on the 0.3% pair, and there was like a bigger distribution on the 1% pair in terms of what was available to trade. And then as the price sold down into this 5 and 6 cent range, I'm going to now refresh this and give you guys what it looks like today. Now remember this block of liquidity sitting here, this is just the anchor liquidity in the system. This liquidity has been in here for 700 days. This is long-term believers in the system, guys that want to support the system and give people an opportunity to trade somewhere between 3 cents and 5.4 cents, all right? So that has not moved. This here is where the market was valuing the or where the market was trying to take price. All right, based on what the market was putting in. All right, now I'm going to go and delete that out, and I'm going to put up the refreshed version of that, and you'll see the difference. It's almost like it's obvious, right? I'm going to make it a little brighter. So you can see. Bam. Hot off the press. Totally different, right? Totally different. All of that market action that was out here between 7 and 9 cents, gone. And all of that has been, now the market is unified, and like nobody really thinks prices going to over 10 cents in terms of liquidity providers. They don't see it going there tomorrow, so they're not going to put liquidity there because they're not going to make money there. They're going to make money in this zone here, which is above the anchor position. If they let the price slip back down into the anchor position, it's a problem for the market, because now that anchor position is stealing a large percentage of the funds in terms of fees, because they're competing against this 2.8 million bucks that's sitting here for fees. And most of the guys that are waiting for mainnet that have the ability to provide liquidity just would rather not compete with them and just have the price stay in this general range, right? And also, they're giving whales a chance to absorb lots of the supply inside of here without getting much slippage. And so I think, this makes sense to me, probably makes sense to you guys, that with that small amount of supply that is available on market, it's sitting just in this general region between 5.4 cents and 7.5 cents.
Well, not just that, looking at that now, it makes sense why the price from the top dipped into that high liquidity zone and then bounced off of it, because there's a lot of competition to accumulate those coins at those prices with not much slippage, right? So it's like the pools fill up, but there's only a finite number of coins there that can be bought at those specific prices. So if you have say several large players, even like 2 to 3 of them, who are trying to accumulate hundreds of millions of hex, well, each time it fills up a couple bars in that large liquidity zone, it's basically like, hey, who's going to scoop this up first before we get out of it? And so that's why, that what I just said makes a lot of sense for why it dipped into it and then had such a violent reaction out of it, because it seems as if people are waiting to get into that zone to get good order execution at a reasonable price, or at a good price, not even a reasonable price, at a good price, because they can't make those same purchases now because they're going to slip the price up too much. They're just going to give fees to people, and then they're going to be used as exit liquidity. For people looking to make a short-term exit, which, obviously people are trying to do, because we're experiencing some pretty nasty sell-offs right now. But yeah, that's kind of my interpretation on that chart.
Very good. And Crispy Man?
I don't think I have a whole lot to add. I can see where I can see why we're at the price we're at and why we're ranging the way we are, right? Because anything above what you're calling the base, right, is going to be kind of volatile, and that means that if somebody's selling, it's going to go down, and pretty quickly, and if they're buying, it could go up pretty quickly, right? So it really depends on that.
Whales are looking to absorb here,
stating the obvious,
and we can't fucking get into this zone, because every time you get into this zone, there's nothing to buy. So it's like price is just smack dab trapped right here.
Yeah. And pair that with the gas fee problem. You're not having people coming in with 100, 200 bucks trying to FOMO in, because, well, they're paying 20, 30% in a gas fee on a lucky transaction. Yeah. So, my hypothesis has always been it's the retail FOMO that pushes price up into the high slippage zones, because they're still getting good order execution relative to their purchase size. And then it's the whale accumulation at the higher slippage areas that acts as the support, until somebody wants to decide to pump it up higher and support price at a higher range.
I think in just short term, I think we could see another test of that 5.2 cent level, a W bottom, and then we start to move higher into mainnet, and then this gets kind of parabolic. There's a very good possibility that we can go test 10 cents before mainnet, is what I'm saying. And when I look at the longer term chart here, we're kind of getting that same data points. It's like the 200-day moving average is such a key indicator for us here, because we're smack dab in the middle of this range. We're bouncing off the 200-day moving average. And when did we break out like this and do this last time? You know, we haven't been above the 200-day like this and testing it as support since all the way back here around big payday. So it's been, you know, hundreds of days. Like, you know, this is back in February of 2021 since we've tried to make the same move.
Yeah.
And if it does play out the same, like, you know, there's two ways this can play out. What do you guys think?
Well, I have a question for you, you know, kind of goes hand in hand with this. What do you think about, you know, of course, we're waiting for PulseChain to launch, right? And we don't know when it's going to happen, but a lot of us thought it was going to happen sooner than later, right? And so I pulled all my liquidity. So I know other people have done that as well, just from observation, right? So what effect does that have on this?
Yeah, right. Well, it's twofold, right? It gives it
Yep.
more, it's a higher slippage zone. What we can count on is that the anchor liquidity is not going to leave. So between 3.2 and 5.4, that is the range that we have for accumulation, right? So maybe what this looks like in terms of, you know, after mainnet fork is those that want to dump the price, you know, they're going to try to take all of that liquidity between 5.4 and 3.2. And then whoever is the dummy that gets left trying to sell at 3.2 is where you get stuck, like with massive slippage. So, you know, that's the battle, is like the guys that want to exit are going to be competing over everything below this line. Or they're going to be competing for everything above this line, which isn't a huge range. It's only, let's see here, 40% range. So a minus 40% is what people are competing for. It's like 2.8 million, right? And then, you know, if this plays out like big payday, you know, this drop down here below the 200-day moving average was like a 60% drop. So anything that goes below here is like an automatic buying spree for the guys that are bullish on Hex, right? And there's going to be guys that are bullish on Hex in this range, you know, and if you know, there's enough ammo that comes in to exit, right? So this 200-day is the line of scrimmage in terms of the level to hold. And the last few times we saw this test, we've broken down for 1, 2, 3 weeks, 1, 2, 3 weeks. In both cases, one was like a 30% drop, one was like a 65% drop. And so that basically gets you down to the bottom of this channel. You know, any wicks below will be immediately absorbed, and then we're going to start building structure going into that new bull run.
Yep. That sounds good to me. The only thing that would change it is if we start to see massive shifts in liquidity, or we see people putting a lot of USDC or ETH below that, like that channel, because they're expecting price to go lower and they're trying to catch that from a fee perspective or from a buying perspective. So that would be kind of like the variable to keep in mind once we get mainnet to be watching for on the liquidity pools. Are we seeing a shift? But that would presuppose people are wanting to buy it, which is kind of a good thing.
Yeah. Well, you know, there's a lot of, so you talk about a lot of technical stuff that's probably going to happen next, and then there's a whole bunch of FUD out there too, you know, driving people to, you know, possibly consider, you know, selling before there's a problem, and kind of like a self-fulfilling prophecy, right? You know, sell before the drop. Because even as I'm listening, you know, a lot of the people waking up to it, they're like, well, maybe I ought to get out now. Right. So, you know, if I get out now and I'm standing by to buy more, and see, that's the thing, right? The people, probably a lot of people who are thinking like I'm thinking, I don't want to sell Hex, but if I thought, but I would consider it, right? Because I can be a degen like that. If I thought if I was gonna triple my bag, then I might try to do that. You know, very dangerous probably for me.
I mean, this is a fucking whale's wet dream right here. Like, this is why I think it's got a lower chance of happening. Like, in terms of like extreme downside, 80%. You know, like these guys are going to be, there's not going to be liquidity down here. So like it'll get any buy order that comes in below 3.2 is just going to go right back into the, you know what I mean? So it's, have your limit orders are going to be set here anticipating this. And so there is a possibility where, you know, I want to keep you guys bearish on this, but dude, the reality is you could get some structure. Like, you could get this thing just, you know, a couple pushes lower, but really you just build and it holds, man. And especially if you factor in some of the possibilities with the liquidity bonding on PulseChain.
Well, that'd be the true test, right? Everyone's like max bearish scenario is EHEX gets completely abandoned, and everyone moves over to PulseChain. Well, if like structure can hold and price can be supported with like basically like one of the biggest fundamental reasons to dump the coin because there's a new playground over there that's cheaper to use. Well, that's kind of like the ultimate base to form out. Like, how much worse can it get than a mass exodus to a new blockchain? At least for the retail people, at the very least.
Yep, this is that last call. Like Sloth's trying to tell you guys that any downside here is a dip to buy on ETHX. You know?
Yeah.
It's not going. It's not going to die. That guy that's been buying, that just freaking paid $260 in gas to pull out $35,000. He ain't leaving. He sees the bet. He gets value. Those guys that have millions in hex, they have value at 5 cents. They don't need it to go up, but it will because they'll absorb supply here. So,
damn, I hate it when there's dips like that. Now, because I always want to buy more. You know.
I know.
It gets pretty addictive.
Start irresponsibly buying.
And, you know,
I was going to say that.
That's because you want to buy, but then you miss it because it doesn't have. You know what I mean? It's like no matter what, have some in, some out, right? Have some cash, have some hex, right?
Yep.
So
well,
you're saying, so you're saying there's a chance.
There's a chance, bro.
There's a chance. You too can have a couple million hex, Crispy, or a couple tens of millions of hex.
Limit orders are set, bro.
I'm stacking.
Well, that could be a good time to bring up that talk a little bit about the rolling stakes. We were chatting about a little bit with the hex calculator, like how much you need to get a certain amount of hex. Because if this is the last call, then this is kind of like, you know, the last call to get a bag that's substantial enough to print you a reasonable monthly income.
Yes, sir. Like, so the way, you know, what gives this hex price on ETH such a runway is, you know, the incoming sell pressure. And if you guys, it's just minimal, right? Like if you have 100,000 hex stake for 30 days, you're going to make a whopping $32. It doesn't look that juicy. But that doesn't change the point that guys that have, you know, 10 million can still at this price pull off, you know, $3,300 a month, right? So it's still meaningful for the top 2,000, 3,000 wallets, right? And so there's a market there for them at this price, and there always will be. And then you're seeing it in the price chart because it's holding the 200-day moving average. And so I think what this does is it lays groundwork or runway for the price of EHEX to go, NPX to go much higher leading into this bull run and giving us, you know, perspective on what we can see in types of returns. Like what does it cost to get, you know, 100,000 hex now? It's not that much. I think it's like like $5,000 or something.
$5,000. Yeah.
Where are we at? 5.8, 5.6.
So 5,000, six grand basically. You get comfortably in the six digit range.
You know, so those guys that are sitting liquid right now, there's a lot of them that are sitting liquid, and to wait to decide what they're going to do until after the fork, that's totally reasonable. You know, a lot of us should be thinking that way. So you have optionality. You know, we're looking at this in terms of like, well, what's it going to be like now at like 56 cents again? And we start building support. You know, all of a sudden now your principal is, you know, 10x higher, and you can stake and still get, you know, $400. But it won't stop there because that's still the amount of like 100,000 stakers can't crush the price with $400 a month. I'm sorry, they're just not going to be able to do it. You know, so the price is going to have to go to like, you know, multi-dollar targets to get into a zone where, you know, these guys are going to have enough to crash price. And if even at even 100,000 hex at $2, you're still only making $1,500 a month. So this is why I'm bullish on that. The incoming inflation isn't enough to suppress price forever.
Yep, it's literally just the people who have the large bags. Whenever they decide they want to stop selling, and we get plenty of new demand coming in for these exact reasons, because, you know, it's still feasible to get 100,000 hex. It's still feasible to get 2, 3, even 500,000 hex if you're willing to, if you have the means to put in, you know, what is it, 50 grand for 500,000, something like that. If you're able and have the means to do that, that's still very feasible. And then you just put that at a dollar price point, gets flipped to support one day. And the reason for that would be at $1, you can still get 1 million hex for $1 million. So people who can allocate that size of a bag into an investment, because there are people who can chuck $1 million into an investment, no problem. They still have the ability to get a reasonable size position in the ecosystem. Once that flips, you know, where's I going with that? That still provides, at least in my head, motivation to accumulate hex on the Ethereum side, especially on the last call dip that we were just talking about. You're able to secure that position still.
Yeah, a couple things to add to that. I know we're talking kind of in generalities, right? And I know you're talking about the rolling stakes because we see so many people rolling, and so we know that people like that, and that's why it's happening. And some of us talk that way. But you know, behind that strategy though is really laddering, right? And I think that's some of the comments showing up in chat as well. So we wouldn't want to infer to people, hey, you shouldn't ladder, you should do short stakes. That's not it. Just showing kind of the examples of what's there, and you can really increase your opportunity by doing a ladder, because you gain a whole lot more yield, like tons more yield, right? By doing a ladder rather than you know, sticking with short rolling stakes. The other thing I'd say, as I've been doing my research on this past you know, this past cycle and where we're headed now, some people might think, so forget about PulseChain for a moment. Some people might think that they were late and now isn't a good time, but I think the past shows us that this is like a prime time to be getting into crypto in general. Like, it's like this is a good time if things were to repeat, you know, like they have in the past, and and if you're able to
sleeping on it,
stay
man.
strong.
What do they think? What are they like? Okay, sorry to be the freaking hex staker, hex miner bull here, but like, look at, if you had a 15-year stake. Okay, forget about the gas fee issue, right? Let's say you bought a few ETH and you're good, right? You're gonna have that ETH to take care of your staking needs. Okay. Well, okay, so if you had a 15-year stake coming off every year, for every year, every year you're putting in a 15-year stake, then every year you're getting the yield from a 15-year stake, and I think that's kind of like gonna be the unsung hero play, right?
Yeah. Yeah, that would be the highest one, and that's you know, you're looking at new stakes. You know, these numbers would be for new stakes, and the older ones, you know, they're much higher, and in 15 years, this number would be higher based on how the system's been operating. Because once you get into the APY for the first year, yeah, sure, it might start out this way, but over time, as the payouts go up, your APY floats up. And so it's a huge difference, you know, if you do laddering versus do everything rolling every 30 days. Now, I know I can't convince people who like to do that to do anything different, but it's true percentage wise, you know.
Proof is in the pudding.
I think there are like some OG 15-year stakes that are at like 100% APYs right now, just because T-share dilution and increased payout. Because, like, you know, T-shares have gone down. We cracked under 10 million, but the payout per T-share has gone up. We're like really comfortably at like 6.5 hex per T-share.
Yeah.
Well,
I was going to say, well, the big payday ones for sure still are probably over 100%. But are you thinking that some of the ones that are post big payday are actually that high as well?
No, this is probably all big payday stakes, like OG first couple months of the system.
Well,
15
it
years.
wouldn't surprise me. It's very possible, right? You know, because they were running 60-65% for some of the older stakes, and with the changes in the system, it's quite possible for them to get up 70-80%. And if all the people who think that we're going to go down really hard on EHEX because of a dump, and because they're going to be emergency end staking, as a staker, man, I'm just thinking I'm going to end up with 100% APY. That's what I think.
Yep.
Well, maybe it won't be that high, guys, but
you know, I think what we're talking about really gets at what Hex Monkey was part of what he's talking about. Like, rolling stakes are silly. You have to keep buying back your T-shares, and kind of I compartmentalize those two parts of like my Hex portfolio, where it's like I have my T-shares that I'm buying for long term to get these huge benefits of the T-share rate increase, payout per T-share increase, T-share deflation. But the rolling stakes are really more like actually a liquid position, right? Like, I'm only locking myself up for 14 to 30 days to scrape off the yield that I can get, and I'm lucky to get that yield based on the system. But really, that's more of a liquid position to have. And you know, this is something I was saying in the background, but I've really noticed the conversation. The conversations being had around Hex have really deviated away from the long-term value of the T-share. And part of that's because we have like PulseChain, we have all these cool new things to talk about, PulseX, Hedron, Icosa, et cetera, et cetera. But also, I think a large reason why, or significant reason why, is because this is like the last call, as we're saying, to get a size bag that's big enough where a rolling stake actually makes sense. As that opportunity starts to go away, I think the conversation collectively will shift back to long-term T-share accumulation, because that's really the only way you're going to be able to preserve value and be able to extract significant value in the future. So I think this is a really unique time in the Hex's history where we're able to talk about these short-term stakes, because we're able to accumulate a lot of Hex because we're on such a deep discount, and potentially have to even get a higher percent discount on the Ethereum side upon mainnet.
Mm-hmm.
Yeah.
There's a lot there, man. So I hope you guys are paying attention to all that. That's important.
Yeah, play it back a couple times. Sometimes I talk too fast, so slow me down.
The main takeaway here is like everyone in the ecosystem has a recency bias in the sense that we're used to 5-cent hacks now. Like, we're used to it, and that's a good thing, because a couple years ago we were used to like 0.3 of a cent hacks. That was the norm. And now all of a sudden 5-cent hex is the norm. So what happens when 50-cent hex is the norm, or $1 is the norm? You know, it's the opportunity to get a relatively sizable bag that's meaningful, that you can yield farm the T-share system with, is going to be gone in a couple of years. And the only option for those guys coming in then, relative to their wage that they're bringing in or their investment money that they're bringing in, is going to be longer term stakes. And those of you that took the heed now and accumulated a decent sized bag at these lows and did set up some form of a ladder now for the long term will be the most happy out of the group. You know, and there's the whole, my mind automatically shifts to, you know, those of us that have these huge Hedron minting bonuses and how useful that was. But what if there's more airdrops or more add-ons that comes later for those of us that stake now, right? You know, you can't ever rule that out.
Well, not only can you not rule it out, but I think there is a significant non-zero probability of that, because of the fixed monetary policy of Hex's inflation, right? So you have a predictable unit of account where you can estimate, and Crispy has beautifully outlined the projection of the T-share rate over time, over multiple years, based on the data we currently have. And so if you want to build something with an inflation model that's underlying mechanism is deflationary, the T-share rate is the perfect thing to base it off of, because it already has a history of 100% uptime. It's already being utilized by a large community, and it has an easy distribution model to get it into the hands of people quickly, because a significant number of people own T-shares.
Yeah, and you know, you seem to know a lot about T-shares, and I'll be funny. We don't know shit, right? So here's the problem. This is kind of what Axis is talking about, and he just mentioned it, right? It is boil the frog season, man. Each of us got a frog at our pot, and we're boiling the hell out of it, and it's not Pepe. And what's going on here is even my estimates are wrong, right? Because they can only keep up so fast. And like one of the Patreon guys got a hold of me. I think it was a Patreon guy, but today gave me some of his alpha and what he's observing. I keep saying it, but it's kind of like normal for us just to look at this curve and go, oh yeah, it goes up to the right. And even I do it. But man, that thing is moving. It's a living thing every day. So that it's becoming more exponential every day, if that's the right way to say that, because what's happening is it's shifting up higher and higher and sooner. And it has strong ramifications for both X staking and also Hedron and Icosa. And I was looking at it last week, and we were looking at 30% increase in how long you have to stake. So when we're talking about these short stakers too, and kind of going along the lines of what you're talking about, Axis, some of these 30-day stakers, they got to stake another 46 days afterwards of everything, including their yield, just to get the same yield.
Yep.
It really puts the pressure on them, and it takes pressure off the system.
Yeah, absolutely. It's crazy.
Yeah.
We're going to be looking back at this time for sure.
Yeah, that's probably something I don't say enough when I talk about rolling stakes. Is like these are the numbers we're calculating today, but with each iteration, you're getting less and less yield over time. Now, the flip side to that is hopefully you're having price appreciation proportional to that dilution to keep the same dollar value of passive income. But like the 3,400 hex you get on $500,000 today is not going to be the same amount you're going to get in the next 30-day cycle of your staking. But it might not matter because the price has gone up, maybe the 10% dilution that you got.
Yeah, it all depends the game you're playing, right? And that's why that's why it's fantastic. There's so many different strategies, right? Like I can totally get behind someone saying, "Hey, I have my long and my medium term plans in play, and so I have this liquid hex and I want to earn some extra yield." So yeah, of course.
Yep.
Why wouldn't you do that? I mean, because you want it to be available. But boy, the guys who are all in, that are looking to win the game, in 15 years, they got quite a setup, man.
Mm-hmm.
Yeah, you're not gonna. The only way you'll really be outperforming those guys is probably if you're timing tops and bottoms like perfectly, or with like a significant degree of accuracy.
I saw a comment here that I thought was interesting, kind of not related, but kind of related. It was about can't wait for Hex on PulseChain. It's like starting all over again. It's a good comment because I don't think that's how this is at all. Like Hex is not starting all over again. The price is not going to be zero. I think Hex is, obviously everything's getting copied over. The same actors have the same power on a new network. And the T-share has been figured out by now and talked at Ed. Nothing changed. It's just it's more like a stock split, really. And the dollar amount does not matter. It's just it's the price percentage changes that are different, right?
I'll give you a mixture of both of those things you just said. I do think it's different. I think it's way different, but not for the same reasons, right? Maybe that you were suggesting when you said it was the same. Of course, the contract's the same. Things are set up the same. I think it's going to give us the freedom for it to be treated like it's a brand new asset.
Gotcha.
And in that way, and so in that way, I think that sky's the limit. I think that's what I think. I think anything can happen. Anything can happen at all.
Sure. Okay. So so that you can model out behavior differently, because what's going to happen is, and I agree with you on this, it's that people are going to be able to use it in any which way they want, short, long, in the middle. It don't matter. The gas fees no longer become part of the decision making process, and so then people are going to act differently on that chain. And so yeah, that is a reality of what we're facing. It does. I'm excited for that, man. It's refreshing because now we're not tied down to some of the problems with Ethereum.
Yeah.
Yep. Hey, for Archie S here, you said you don't think T-share rate and PulseChain will be different, though. Of course, they're going to be different after the fork at some point, but don't expect them to be too different. The only way that you're going to see a major shift in those T-share rates are going to be if people merge the end stake, and more than likely, if you assume that we're going to see emergency end stakes on Ethereum, if you assume we're going to see those on Ethereum, and that we're also going to see more staking activity on PulseChain, you're probably going to end up with a slightly higher share rate on ETH and a kind of muted increase on PulseChain.
There's a small quote from Sami at the end of one of his videos. I don't remember which one, but I liked it a lot, and I think it's pretty germane to what we're talking about. And he ended the video with it, and he was like, basically, what are you going to think? Do you think like PulseChain, PulseX, and PHEX are on their first cycle, or do you think they're just a continuation into Hex's second cycle? Like, just because this is technically their first cycle from what the chart is going to show us perspective, but are they really just riding the wave of Hex's first cycle that it's already existed on? And I think that's
And that's what Axis was just talking about. I think that's
Exactly.
kind of this. I think that's the circumstance. Yeah.
Yep. Breezy Bird, don't worry. We're going to write you a script on Tetra to be able to mint your Icosa very cheap without having to worry about it. Oh man. Let's see. I'll talk a little bit about kind of that stuff I shared in your boardroom Axis on like the just finishing up the rolling stakes topic really quickly, about how I like to frame how much hex I could potentially want to accumulate in terms of how much yield I might be able to get at future price points. So with 1 million hex, each month at the current T-share rate, you're printing 7,000 hex per month. Now, and these are all, I'm just using round numbers just to get the idea across. You can do this kind of math with any range of where you think the price will go. But say, for example, we get to $10 hex, right? A $10 hex, that million is now earning you 70 grand every month, which is pretty insane. But you can't rely on that because presumably like a $10 hex is going to be like a macro top. But what you can do is reasonably count on a 90% dip. So if you didn't want to sell any of the hex at this price point, or say you did want to, say you wanted to take, well, I'll get to that in a second. You can reasonably rely on a $1 hex being some level of decent support because that's a 90% dip, and 90% dips are in the game for crypto. So even though your bag is printing you $70,000 a month, you have a base amount of yield of $7,000 a month. So if you say you wanted to retire off your crypto or retire off your hex, your base budget, if it's under 7,000, you can reasonably live off of that yield, assuming no catastrophic event, for a decent amount of time, because it's not going to go straight from $10 to $1. It's probably going to bleed out over time to get down to that 90% dip. So you have this range of $7,000 to $70,000 of passive income over time. Then you can kind of calculate into that profit taking. So say of that million hex, you take 50% out at, say you DCA it out at an average of $8 per hex. Like you start DCAing out around $6, you get all the way to 10, and then you go back down to 6 again, and your average DCA for 500,000 is $8. So it's 8 times 500, 1, 2, 3. So you've pulled out $4 million of liquidity, and you're not really yielding on that anymore. And now you're yielding on 500,000 hex. So you're getting about $3,000 to $30,000 based on that 90% spread. But say you're able to DCA that $4 million back in at around a $2.50 price range. If you start at like $3, goes to $1 and back up, you've deployed all your capital back at $2.50. So if you divide that by 2.5, you get $1.6 million of profit. So add that to your 500,000. You now have doubled your hex bag by de-risking 50%, getting an average price of that spread. And now with the hex bottom being $1, you now have redone your base yield to be $15,000. So like there's a play here with being able to calculate how much yield you can safely generate on a 30-day spread, and then what your new baseline will be if you just roughly approximate sell it, taking profits on the top and reaccumulating at the next bottom. And then it doesn't have to be $10 or $1. It could be $5.50. It could be whatever you want it. With a 90, maybe you want to repeat the current dip with like 95%. You can do it with that too. But that's where a lot of my head's been at, in the numbers I've been running in the background for how much to accumulate now for future price points.
Yeah, and like you only get these types of opportunities every 4 or 5 years. So something you want to be on top of it.
Yeah, I think this is something that would be extremely valuable, to really articulate and communicate with people,
Yeah, that's why we're, if you want to drop it, we can. Like we've been talking a lot about, the three of us, about how we want the market, we want the people that listen to us to be prepared for that in the event that they can take advantage of these kinds of strategies and scenarios. And so like we're looking at putting together sometime this summer, we should have something coming in terms of a course, which is all about buying the bottom and selling the top using all kinds of different tools and indicators and on-chain supply data. So you can be on top of it, and you can really capitalize to the maximum amount of your ability in these events.
Yeah.
So.
Yeah, I'm convinced, based on the type of stuff we have available, that we can definitely identify when the best times are to do these things, right?
Yeah.
I'm convinced of it in a way that makes sense to me, right? So I'm saying it this way because, like in the past, I didn't always know that I should take action when I saw the stuff happen.
Yeah.
But I need to take action. I think other people would appreciate that too. So.
Yeah, like I would say that I can comfortably say now that, you know, if you go look at my pinned tweet on my Twitter, like I had a chart that I put together that predicted that it was like roughly 58 cents would be the top for Hex last cycle. And the reason why I say that is because I came to that conclusion just based on the 10,000x from the lows would have been 56 cents, but also with like the trajectory of the chart, right? And just some of the basic indicators. But now with what Crispy's been working on, we literally have, actually, I think I changed the pinned tweet now, but that's not the right one, but my bad. What, like, I'm convinced that we now have the data set and the models to like show exactly when, and we're not just using these tools on Hex, we're using them on a lot of cryptos so that you really do get a full 360-degree view of when is the best time to buy and sell out of the market. And when you add in the ability to do it through LP, you have a whole other layer of capabilities of income and cash flows coming in as you're DCAing out and DCAing in. So it's like, I feel like we really do have like the ultimate toolkit now, and we're going to be providing that through a course this summer.
Yep. We got, you know, Axis and I are planning to relaunch at some point in the summer too, the LP course. We've cleaned things up, added some new stuff. And then Crispy Man has some really cool tools for the kind of, I guess, how you want to say it?
It's like,
market cycle course?
Yeah,
cycle theory course. Yeah.
Yeah. So what we're working on, this is just like in the beginning phases, so it won't be ready for a few months, but when it is ready, you'll like it. It's going to be cycle theory, and it's going to give you all the tools you need to sell the top in the next cycle in a safe way.
And actually, it probably meshes well because me and Crispy in the background have also floated the idea around of applying fire principles to Hex, and like how you would what's what I'm looking for? How would you practice these principles in like financial independence, retire early, Reddit groups? How would you apply those principles or utilize Hex to fulfill those principles? And so actually, that could be a good framing tool for this market cycle in terms of framing, like when you're looking to enter / exit, like what financial context are you doing that, and how does doing that help further your personal goals towards financial freedom?
Yeah, if you made $500,000 in Hex and you sold it all in one go, and now you have 500,000 with no other plan, like that 500,000 is going to run out. Like name any amount of money, $2 million. Well, it's going to run out. So you need to have a long-term strategy, and this is where we want to come in and help people out.
100%. Hey, listen, that happens, dude. There's more. I know more than one person that had a stack of cash like that. It's not what you think it is.
Unless unless you're paying yourself, like you're gonna run out, right? It's like a river that flows. You want things flowing into your pockets at all times.
And PulseChain is going to give us near infinite yielding opportunities for whichever one you prefer, whichever setup you want to, whatever passive income machine you want to build. The opportunities are going to be there, and the opportunities to automate it are even going to be there. Like it's just going to be, it's a whole new world when PulseChain launches for all the stuff that we're talking about.
Yeah, I mean, this is a great point from Corey Geary. I mean, it's like, hats off to him. Like, there is an element here where you do make good money in the next cycle, and there is some of that money is going to, Funny Jim talks about it at length. There's going to be a percentage of people that are going to take that money and move that into, other people come to mind as well, but that are going to take that money and they're going to put it into the real estate market. Because, the way that these cycles are lining up right now, when crypto's peaking, real estate's still going to be relatively cheap. And there's so many layers, many things to talk about, and we can't wait to share more.
Yep, I dropped Corey Geary's YouTube channel. Him and Dane do a great show most days on the weekdays at like 12 p.m. EST. Definitely take a look, learn a little bit about real estate. Those guys are, I think those two are going to be a huge asset to our community already, but even more so as we continue to grow. So yeah, definitely give them a follow, like all their stuff, and watch it.
you guys want to dive into the supply data of Hex?
Yeah, let's do that because I think they'll be exciting for people.
Now that we talked about an hour on Hex rolling stakes.
It's also related though, you know.
Oh yeah.
So yeah, Crispy Man has been working on this monthly annualized inflation. This is like you got total Hex supply, you know, with and without the origin address, some liquidity charts. So we'll kind of take you through. This has all been updated and refined since we last showed it a couple months ago. And so now we really have a good gauge on what the supply dynamic looks like in Hex. And so, yeah, we'll just, I don't know, I'm just going to kind of let you take the lead here and I'll just scroll through it.
You just want to go through. All right. So you know, what we were trying to capture here in the first slide is we get a lot of questions about inflation 369 and what does that mean and how much is coming out. And this a big shout out again to Ninad for this on this is his original you know, actualization chart that we put into Hexfire, but it shows just really what kind of actual inflation have we been seeing on a month over month basis, and it's not 369, right? And so, but you know, there are times where it goes up, of course, right? Because there'll be a particular period, but it kind of puts it in perspective of how much that we have coming out. And the whole reason when I say coming out, I mean newly, freshly minted Hex that's never been minted before, right? And the reason this came about is I wanted to either prove or disprove scarcity. And my conclusion, which I guess I'll make it my thesis, is yes, Hex is more scarce than ever before. Now, when people used to say that, I'd be like, what the hell are they talking about? How can it be more scarce, right? So if we just start going through the charts, you kind of get there.
Yeah, I want to talk about just this chart on the bottom here first. It's like this is an amazing chart, monthly annualized inflation. So the pink line is the actual rate of change of new Hex coming on the market, or I'm sorry, coming out of the black hole. So this is new Hex coming into the circulating supply. And then the blue line is the dollar value of that Hex. And I think, tell me if I'm wrong, but both of these huge spikes was mostly because of the Godwell, correct?
Yeah. Those are those type of time frames. Yeah.
So because of that, that's not usually sold. So it's like you see these huge spikes of new dollars coming into the market, but they're not actually hitting the market circulating supply. It's mostly just being hoarded.
Right, and some of these also, yes, it's being hoarded, and we can see that on the other charts as well.
But also with that, you know, we did see that peak at 13.5. So you know, we did get an insanely high number of dollar value of new inflation coming off, not just because of the Godwell. So like we did see that price peaked at this level, and I think it was the same for here back in May. We didn't get mainnet, and then in June we had the huge crash from like what was it like 20 cents all the way down to 3.5 cents in like a month and a half. So even though a majority of this looked scary, the dumpings at these two time frames was not necessarily the guy that was getting all that inflation. So something to keep note of.
Very good. I think you can probably. I think you froze.
So here we got the total Hex supply.
Oh, yes.
Tell me more.
Yay. Nope. It's cutting out.
I'm not sure if I'm frozen or if he's frozen. I'm not doing anything. So.
I can hear you, Crispy.
All right.
Oh, I think he's back.
He's back.
All right, my bad. I closed out one of the big heavy hitter windows I had open.
Yeah, that's what happens to me too. Same type of thing. Yeah, and so just in general, right? We get a lot of questions from people new to the environment, new to the community, and they go, "Oh my God, there's so much supply." So yes, we have a high supply, relatively high. I mean, it's not as high as like a SHIB or something like that, but it's relatively high, and it goes up and to the right. Right?
That
Why?
really does because the whole argument of, you know, big huge supplies can't move. Well, SHIB did it, Pepe did it, so trillions of supply, which we don't have they do big moves too. Mm-hmm. It's all about how that supply is redistributed, right? Okay.
Well, yeah, not only that, we're by a factor of 10, we're smaller. Yeah. Right. So even though we have this Hex supply, which does go up, it also is measuring all Hex. It's not user controlled Hex, it's all Hex. And so you can clearly see that once we start digging into it. Now, some of it's locked, and then we have circulating Hex as our next next chart. And in the circulating hex chart, what it's showing us is what the circulating supply is. And it's a little bit more jagged, right? Because circulating is affected by what's been locked into miners and what comes back out, right? So you see a little bit more jagged line, but also up into the right. So circulating supply is expected to go up into the right. Now, I guess it's possible with enough adoption that circulating supply would actually downtrend, but you know, that would mean that we're all very super happy because we've adopted so many new people that would be the case. So I think you're always going to see it trending upwards a little bit to the right as we go forward, and you can clearly see big events and Godwell make a difference. But this is still not the real story. The real story is taking a look at what's going on with the OA. And these are the addresses we think are related to the origin address. We think that because they receive text from the origin address. And so loosely we call them the daughter addresses or the OA. But you can clearly see that it is also on an upward in the right direction. You know, of course, the sacrifices were huge. They were big events for the OA because we classify the hex that went into the sacrifice addresses as OA controlled, but we were just forever up and to the right based on you know, besides those events, based on the penalties that are paid, and this is an interesting part of this because half of all the penalties go to the stakers and they just turn up in the daily payout. The other half goes to the OA. And when hex is minted and sent to the OA, it now begins to increase our daily supply because we have a daily payout, and so that begins to go up. But you can see it's nearly flat. So in the grand scheme of things, it's not like this is gangbusters. So the next one's our staked hex supply. And again, not unexpected, right, to see this being a little jagged. We have several hundred, you know, stakes a day that can be ended or are ended. But you know, we did see a huge drop here recently at a slope that we haven't seen before with our, you know, with our stake supply. And of course, we believe that is because people are holding off for this launch. I mean, I would have done at least another stake right now. If it wasn't that I was expecting PulseChain to launch. So why is that? I don't know why that is, actually, to tell you the truth. I don't know why, but I guess it's just natural for people to
like
want to
optionality,
hold,
and they don't
yeah,
like being
flex.
locked out of potential to make a move after the fork. And I mean, gas fees has a layer in there too. Like, do we really want to? I mean, general user, are you really going to want to stake on Ethereum as much as you're going to want to stake on PHEX on PulseChain? Probably generally no, but for those that will still do that, and so I anticipate that this will also revert back to the upside after the mainnet goes live and people kind of situated around that 90-day time frame. But yeah, people are definitely holding off staking right now, and what it's doing is it's creating huge opportunity for those guys that have stakes in the system right now to earn way more yield going through this phase, and for liquidity providers who are willing to take, you know, a bit of a hit in terms of if the mainnet happens and they miss out on, like, let's say you're a big bag and you miss out on your copy, but yet you made 100% returns due to the volatility in and around mainnet launch, then you still made money. And so, like, for some people, leaving liquidity in is an option, right? Especially if you can print millions of hex a month, then you're willing to part with a million hex that doesn't get forked just to earn on the volatility before, in, and after mainnet. So because of the circumstances, it's forcing the hands of a lot of hex users to not stake and not provide liquidity because they are either relying on the copy or they've sold their position already because they want dollar value going into the fork. Because nobody knows. But I think the ultimate play here is patience and having allocated bits of it into each of those 3 baskets. If you have big, deep enough pockets, and like those are the guys that will win the hardest, or just having been staked through this whole period.
Yep. Well, go ahead, Sloth.
Yeah, real quick, just a quick thank you and shout out to Hex Mining Hodler for the 30, I think, Australian or super chat. I appreciate it, man. Thank you. And then also, I know I've been talking a lot about, well, not a lot about, but I've mentioned in chats and stuff about, providing liquidity even on like a USDC pair that isn't getting harvested by the AMM bot. There's some it's questionable on whether or not you'll be able to pull the liquidity because you'll need to interact with the Uniswap contract to be able to pull that LP. But I think after listening to Alex, the front end that he developed for the ETH proof of work and ETH proof of stake, that front end will probably have PulseChain, be able to connect to PulseChain. So there's a decent chance that you'll be able to interact with your LP copies on PulseChain as long as it's not an ETH pair or a wrapped ETH pair, because those will be harvested by the LP bot, the AMM bot.
Okay, next chart. Area chart of all supplies.
Yeah. This has been pretty interesting to watch. This one's really a no news, though. You made this observation, Axis, is you can now see in these bands that we actually are trending upwards into the right. It's a little bit difficult to see that that's the case, but this really demonstrates the stabilizing effect that addresses that we call the OA addresses really have on the entire ecosystem.
In terms of actual number, it's a 20 billion hex chain difference between the far left and the far right.
Yeah, that's crazy, huh?
And not much for 2 years of action. Not much.
Yeah, not much at all.
If it was $1 per hex, that's $20 billion of new hex created over 2 years. That's not a lot in terms of how big this market can get as it matures over time.
Yep. So this is what this was meant to demonstrate for us. And if you move to the next one, which is the adjusted circulating hex supply, what we did is we withdrew, or I took out the OA from the calculation. And it is, we'll get there in a second, but it is the circulating supply with the OA removed. And I don't know if you can select that on yours, Axis.
I'm sorry, do what? I was typing
Oh,
out.
yeah, I know. I saw you. Adjusted circulating hex supply. If you would click on that one. Next one. Right there. Okay. That's right. Yeah, I guess if I was driving, it'd make more sense, right? Now, so this makes a lot of sense too, because if the staking is going down, right, where's all that hex? It's got to be circulating. So when we remove the OA circulating supply out of that equation, or adjusted with the OA filtered out, brings us right around 24 billion hex that are part of the circulating hex supply that we think will actually, you would actually, if you're doing your risk management, you would be evaluating what those people are going to do with that hex. I don't know if you have anything else you wanted to say on this one, Axis, or to add.
Let's see. Just some interesting things, like when the PulseChain sacrifice happened, we saw this huge amount of hex pulled out of the supply. And, the price was going parabolic at that time. And so we didn't see the same thing happen after PulseX. We saw PulseX that, more supply came on, right? And I guess that was just like a main thing for me. Yeah. Just that, like, there was a divergence from during PulseChain sack phase and PulseX sack phase.
Well, I think it's pretty cool, because what it does, it shows you what people were actually sacrificing for which of those sacrifices as well. Mm-hmm. We prepped so hard for that PulseChain sacrifice that much of the value was hex. And so again, basically people empty their pockets of their hex in order to participate in the Pulse sacrifice. Yeah. And it does make sense that over time we're going to be seeing even more, more supply come into our pockets. So of course the adjusted circulating hex supply should be going up and to the right. But again, it's a stark difference when you're talking about, and Sami talks about this sometimes, you know, your friend Sami. He'll talk about this sometimes. You know, what is really, and then we'll get to the bullish part at the end, but what, you know, are we talking about 680 billion, 650 billion, or are we talking about 25 billion? And what's the difference? It's magnitudes of difference, right?
Magnitudes, seriously.
Like,
Mhm.
like,
That
you
that
know,
OA versus non-OA supply management, like that's
Completely different picture.
yeah. And what I would suggest to people is, you know, forget that forget that we give it a name away. Why don't we you know, measure or judge based on what the addresses actually do, and they don't do anything. And so they're essentially, you know, in Bitcoin world or Bitcoin world, it would be extremely bullish to be looking at Satoshi's wallet, and it never moves and never does anything. It would, in fact, every day you can go find people talk about that, and even indicators, etc. So why, you know, why not judge our addresses the same way? You know, well, no matter who owns them, and we'll get to that at the end. All right, now this one's really cool. This one you should speak to, Axis, because I think it shows the two different things, you know, going
This
on.
is amazing. Like this is so that the top panel is showing us again the adjusted circulating supply of hex, and the bottom is showing you the amount of hex that's staked. And you can see that they're literally inverse of each other, obviously, because as stakes end, more circulating supply comes out of the market. As stakes are started, you know, the reverse happens, right? More stakes or more circulating supply gets cuffed away and burned.
Yeah, and this tail end corresponds to the 10 million hex number too, by the way, right? Because we wouldn't have gotten to the 10 million T-share count if this wasn't happening.
Yeah.
So there's 61 billion hex staked.
Yeah,
do you remember how much of that is? Do you have this is just a thought. Do you know how much of that is OA staked?
I have to go double check that. I don't know offhand. I do have hey, wait a minute, I have a dashboard for that. They'll tell me.
I don't know where to look.
If you go back to this dashboard, go to Ritualist, and then click on OA. It should already be selected.
Yep.
Yeah, OA related. Yeah. So, and then look over to staked.
77
yeah,
billion?
yeah, that would make sense because the way I count them might be different on the two panels because I might not have excluded the GAs there. I'll go double check those numbers and make sure that's correct.
Okay.
So it's likely this does not include the OA. Yeah.
Gotcha. Well, that makes sense to me because then you're good. Yeah. So so that's always been filtered out of this staked hex supply. Good to know. Good to know. So then technically the OA's got more staked than all of the rest of the ecosystem.
Yeah, but I'll validate that. I'll make sure that's the case.
I knew this was a Ponzi. No, I'm just kidding.
No, well, you know, with the number, then I'm probably mistaken about that. So let me go. I'll validate that one.
No, it could be true because remember he who has all the coin can set the interest rate, and that's just the reality of the system we live in. Because if the interest rate were too high, it would have put too much sell pressure on the chart. And the interest rate's too low, you're not incentivizing people to come into the system. So it makes sense that that's roughly probably where it would be.
Yeah. All right. All right, and then just to show a couple different things. Now I know you like these too, but these next few charts are just showing us the circulating supply as a percentage of what the total supply is, and then the adjusted circulating as a percentage.
And this is the inverse of the total supply. So yeah, roughly 90% of all hex is circulating. That's including the OA. And less than 10% is actually staked, and half of that is probably OA staked. So maybe 5%, 4.5% of all hex is user staked hex. And I think almost the same numbers can apply. We'll see at the end what the amount of circulating user supply is. And these are key metrics for figuring out how much runway we have in terms of how high price can go leading into the bull run.
100%.
I like those.
This is the, yeah.
And that's the percentages adjusted.
So adjusted circulating hex supply as a percent of total supply, 3.55% currently.
Yeah. Yeah, and so as you go through the panels, it's kind of a progression as you go, and then you get to the liquidity, which this is phenomenal.
This is
right?
alpha right here, you guys. This is like probably one of the most important slides on this whole thing. So if you need help with it, basically all this is saying is that the amount of hex that's available in the pools for purchase and sale continues to trend down forever. And currently, like we've been trading, we've been low on supply in the pools, and every time that it gets lower, you get a spike of new supply in, get down to the low, spike of new supply in, down to the low, spike of new supply in, and so you know it's been fighting off that level, but the trend is down. There's less and less market supply, which is good. That means it's scarce.
I like that the trend line is acting as resistance right now, pretty consistently.
It has for the majority since back in 2021. Ever since we broke here in May 14th of 2021, when we broke out, let's see, price would have been May 14th. This is when here we were. Okay, so this is important because here we were. We touched 2 cents for the second time, once here in December, once again here in May. This is April 5th. We trade down for 3 weeks. We break up when we had that breakout move May 14th from 2 cents all the way up to like 6 cents within 2 weeks. That's when we started our parabolic move higher. That's when you saw this break of supply. Let's see, where's my tab? Here we are. You know, supply of hex in the pools for purchase goes down, down, down. Going into PulseChain, even more of it gets sucked off market. PulseX phase, we're in a downtrend at this point. Now we're starting to see the prices were so good, the hexagons just couldn't hold on to their bags any longer. And they start unloading and putting hex back into the pools because it's so overvalued at this point relative to the size of the market. That's effectively what we're seeing here. But even since back then, this whole thing has acted as resistance because every time we get back below it, try to get back above it, it just gets shot back down. Back above it, shot back down. So hex is continually being absorbed off the market at any price. And here's when the God.
And that's what you want to see. Like that's kind of a prerequisite for price going up, right? Like the coins being distributed and less of them available to be calculated in the ratio of price. So it's good to see that direction is in the price positive direction.
Yeah, and as you know, when I started talking about this, I told you guys that what I was trying to prove was scarcity, and this is the slide that dropped out or jumped out at me as proving scarcity. So now I can also say I believe hex is more scarce because there are less people willing to put up less hex for sale than ever before, and I didn't quite understand that until I visualized this. You know, by looking at the chart.
It's the classic RH quote where it's like supply doesn't matter, it's available supply that matters. That's what actually determines the scarcity.
Yeah, exactly. And then just to give you, probably you can skip the next two and just go to liquidity as a percentage of adjusted circulating supply. This is off the hook as well, right? Because this is what's telling you just so how much of a percentage is there, and we're less than 1% in some cases.
Not even 0.5% of all of the supply is sitting in the pools for use to trade against. And obviously this is a problem for centralized exchanges because even if they wanted to come in and absorb a lot of the supply of hex to get it listed on a Coinbase or a Binance or something, they're just not able to get a big enough portion of the pie. And so really this market will mature at its own pace, and this is kind of why hex decorrelates from time to time, is because it's just its own little swimming pool of value. And until it matures, then maybe the dollar value is big enough that you can convince hexagons to give away more and get it up into this general range again.
Well, and it rings so true because it you know, it's grassroots, right? The whole thing is grassroots. You know, you can't somebody can't come in and just buy the system. They just can't do it. Not without our agreement. I mean, you got to give me a lot of money for my X, right? And now I know some people bristle at that on the other end about all the control that they interpret is there with us, but I mean, it just makes it for a very, very, what's the right way to say this? It provides a lot of value, right? And so with us as miners being willing to hold, it makes a big difference. And
this is truly
then, go
a
ahead.
situation like a Bitcoin 2.0, where in the early days, I mean, Bitcoin was valued and sought after, hard to acquire, and competitive in the mining realm. To get it, to have a majority of the supply, and then they weren't so eager to give it up because they have emotional investment in this thing. Psychologically, they value it in the early days, and it was hard to give up until you saw really high price points, and then that was finally enough to push people over the edge to sell, and that's when you get the big bear market retracements. And I think Hex has done it again, right? And I don't think many cryptos can do this, where it's a one-way ticket to wealth, because the supply is distributed fairly amongst the users, and as that balance tips back the other way, and the original buyers or accumulators get so outrageously wealthy, then they spill it back into a redistribution phase, right? Again, this is just a very small amount of Hex available for sale, 0.38%, and that's user supply.
Well, and now if that isn't bullish enough, go to bonus content. And so this is the one that really blew our minds, or my mind anyways, is just looking at
out, man.
I don't know, but anyways, you'll get back to it. But the what's really super bullish about this bonus content is, we were talking about that number of Hex that's part of the adjusted circulating Hex, which is right about 23 billion. So remember I mentioned about Bitcoin, right? And how it's viewed, that if you don't have any Bitcoin, or you have Bitcoin that hasn't moved in the last year, that's super bullish, right? So in Hex, we've got over 7 billion right now that hasn't moved. So the wallets haven't done anything with any Hex in over a year. That's 32%. And so if you take the approach like they do with the what's the one that they use for Bitcoin? It doesn't matter. But yeah, it's like the TVOP or something like that.
Oh,
TWAP.
TWAP.
Yeah, but it's not time weighted average. But anyways, I'll look it up later. But we effectively only have 15 billion that have been active in the last year. All right, and guess who's the biggest holder of that? Godwill. All right, he automatically qualifies, right? Because he had those stakes that came out and ended. So there's not, in fact, he's the one who's responsible for us going over 20 billion in adjusted circulating anyways. So yeah, maybe 3-4 billion maybe are coming from him, and a couple billion more from the community. So for the increase from where we were before, like 9, 10 to 15. So not a significant, I don't think it's a significant amount as compared to the fact that we have billions of Hex coming out all the time, right?
Mm-hmm.
So people choose to lock it up.
Dollar value, that's like like 900 million bucks. And what's that website that gives you like the trillion? I can't remember now. It's like a website that shows you a graphic of all the world's wealth. All world's wealth. Because you'll see how small $900 million is if you can see.
Alltheworldswealth.com. Is that
I
it?
wish.
Yeah.
It was like it shows you all like the assets and how they're distributed. I can't find it. See if I can find it on another screen while we're just talking about that. But yeah, it's like it's crazy how small $900 million is, and if the Godwill makes up for 20% of that or whatever, then you're only got like $650 million of user funds in Hex, which is a big market, right? It's a big market,
Yep.
but the market action is happening in a $5 million pool, and I think
Mm-hmm.
that is looked on as a negative in a lot of ways. But that's what also gives the potential for price appreciation. So,
Yep.
as with all good
Cuts
assets,
both
it's very
ways.
volatile. Yeah, volatility is the price you pay, right?
Yeah, that's the price you pay, minus the amount you paid to buy. Oh man.
Cool. We can take that down, I
Damn.
guess, and just kind of
Yep.
roll it out and close out for the day. I think we did a lot of good
Yep.
content there.
Yeah.
I think
While
that was a solid hour and a half.
while you're doing that, I'm going to double check
Mm-hmm.
one thing before we go, which I want to get the OA numbers, because that number had to be wrong on that screen.
Okay.
I want to make sure that
What
we
do you
ain't
say, Axis?
Bad info.
anybody bad info.
Yeah.
What do you say? What do you say we do this giveaway?
Yeah, we can do this giveaway. Dude, there's just so much stuff that we can, like, I want to say about just other, like the things that I share on from the Access with the AccessLive.com members, and like the time frames analysis is huge. You know, the cycle theory analysis. You know, I can't give it all away, but like, you know, if that is something that you guys want to know more about, the three of us are offering a lot of like really useful tools. So just make sure to be checking that stuff out if you're not. The LP course was amazing. Like a lot of people got a lot of value out of that. You know, Slothman and myself, we lost our voice for a week after that because we were just grinding hard for 2 days. But just kidding, we didn't. But yeah, I mean, it was just like, it's amazing. Like, you know, I didn't even get to touch on HSI auctions and the deals that we saw on there. Like people like Corey Geary were sucking up 50 T shares for 85% off, and others in the
just
group.
stealing people's money.
Just, you know, you know, the market is very indecisive on what a hex is worth right now. Some people think they're worth a penny. Some people think they're worth 20 cents. You know, the market's currently trading around 6 cents. So, you know, the market will unify, and we will find friendship on the way to it. On the road to it.
we will find friendship, and we will all send Sami 1 ETH. But yeah, that's a great point. Everybody, if you like what you see today and you want more of this stuff on a regular basis, go to accessalive.com, check out the services he's offering. Go to hexfire.io, check out Crispy Man's Patreon. You know, they're both pumping out content pretty consistently. I don't have any like subscription-based services personally, but if you want to support me and you want a one-on-one, I offer consults. Hit me up on Twitter. And keep an eye out for the courses that are going to be coming out in the next this summer. Basically, we got some good stuff rolling out in the summer. Yeah,
I'm really excited for the course stuff now that we've got that rolling. I think that that's going to be super valuable for people and affordable too.
Yep.
All right. Hey, so you want an answer about that hex that I misreported? So we've got about 60 billion staked total, and the OA staked is 8 billion. I sent you the wrong panel because the rich list actually includes the yield to date.
Gotcha,
So that's why that
Gotcha.
had a wrong number. So I apologize for that, but I'll give you that number. And yeah, I tell people go see accessalive.com and go check out Sloth stuff all the time.
Look into hedron.com.
Look into hedron.com.
Yep, look into
yeah, you know, it's like I'm like a broken record. Like, you want to know something about Hedron? Go talk to Sloth.
Hit me up. I got you.
Your front door stuff. Hey there. What do you need?
Pretty much.
Fucking dude.
All right, guys. Everybody in the chat. Hashtag pure alpha. I'm gonna give you 30 more seconds. I'll put it pure alpha. We're gonna do the drawing in a second. You got 30 seconds. All right. Access, hold up the book. Show them the prize.
Here we go, guys. The Power of Hex, brought to you by two super smart German guys. This is coming to you, the winner of this drawing. Let's go.
Yeah.
This is my first one.
And even if you don't win today, consider purchasing it. Let's support each other and everybody who's making this
Pre-sale
awesome,
giveaway. So you're getting
That's
a
right.
pre-sale copy. This is a rare limited edition copy, one of 200, by the way.
Where's
Yeah.
where's the holy water?
Yeah, right.
Maybe Access will even sign it.
The power of hex compels you. The power
Right.
of hex compels you.
All right. And so if your name gets drawn, make sure you mention it in the chat so we know that you're here. You got to be here to win. All right. You ready?
I'm
3.
unliking if I don't win.
Well, the algo's already got your like and engagement, so I'm good.
5, 4,
4,
3,
3.
2, 1. Hit it, Sloth man.
I won.
Let's
I
do
won.
it. Who is it?
Crypto sloth.
Probably great if I won.
This is rigged.
This is rigged.
Josh
Hey,
Baker.
Josh.
Are you here? Josh, are you here? Let's see
If
it.
he's not here,
If he's not here, we got to run it back.
You got 10 seconds, bro. No, I'm just kidding. You got
Yep.
30 seconds, seriously.
Let's see. Josh Baker.
Uh-oh.
I gotta hit this draw again button.
I feel like I'm back at high school football game, 50-50 raffle. And who's gonna win?
Oh, shit.
Oh, man.
Who's gonna win?
Oh, dude, he just had to go take a crap, I bet. He'll be right back. No.
Yeah. All right, 10 seconds. Is he here?
Not seeing it.
All right. Sorry, Josh. Maybe hit us up. Maybe we can do a consolation prize in the future. But here we go again. I love if you win. Hollywood Trader.
All right,
Are
hopefully
you
he's
here?
Hollywood Trader, please message us now.
Hollywood Trader. Come on.
We
We're
have
going to be rolling this thing all day.
to give this book away.
Who knew it was so hard to give free shit away, man?
No shit. People
Oh
don't
my
even
God.
go for their airdrops.
Nope.
Oh, there he
Nothing?
is. There he is.
Oh, we got it?
All right, man. If you're on, what's your Twitter handle? And then you can DM me and we'll
Yep, there
work
it
it
is.
out that way. Give me an address and everything.
Let me pull him up. Where'd he go? There he is. Hollywood Trader. Congratulations. Let me I'm gonna give you Access's I'm gonna throw his Twitter down below. You guys should follow it. It's also in the description. Link up with him and he will get you straightened out with your free knowledge.
Woohoo!
You're gonna get a follow too because I gotta follow you in order for you to message me. So it's a double win.
Very good.
Yep. All right, guys. Hey, thanks for an awesome stream. Thanks for hopping on. And I think this was another highly successful Pure Alpha, and plenty more to come in the future.
Yep. Thanks a lot, guys. Appreciate you, and we'll be back in a couple weeks.
Yep, couple
You
weeks. I'm
guys
going to
too.
finish up my tests, and then I'll be ready to pump out content.
Thanks, guys.
All
Thank
right,
you, everybody in the chat. Thank you in the chat. Hit the likes
out.
on the way out the door.